As we head into Friday's always huge employment report, the most important macro number out there, especially in a market like this where Wall Street's worried about wage inflation from a tight labor market. Can we glean anything about the state of hiring from the payroll processors? Take Paychex, long our favorite, which handles payroll and also human resources outsourcing for all sorts of small and medium-sized businesses. This is a company that usually reports excellent numbers, only to see its stock sell off anyway. But when Paychex delivered this quarter, this was a terrific one. Last Friday, clean top and bottom line beat, bullish full-year forecast, much more bullish than analysts were looking for. They finally broke the pattern, with the stock roaring in response. In fact, it just made another new all-time high today. So what can we extrapolate from these results? Let's check in with Marty Mucci. He's the president and CEO of Paychex to get a clearer picture of the quarter and what is going on. Marty, welcome back to the show.
Thanks, Jim. Great to be here with you.
All right. Well, let's start by saying happy 50th. It's an amazing thing for companies to be 50 years old, to get that far. What has been, if you had to look at the long-term success of Paychex, the reason why you went from being a small company, very small when you started, to being the giant in your business?
Well, thanks, Jim. I think it's been really about the people at Paychex. Our employees have made the difference with service and the innovation. You know, we have always tried to stay ahead of the market from a technology and innovation perspective, always focused on serving our clients and being there for them. And none better time than the pandemic when they were really trying to fight for their survival. We were there to help them and be a friend to small business and medium businesses.
Well, you absolutely have been, and particularly with PPP, which has been very difficult to understand. But you had a team that was all set so that people could get that money back that they needed to stay in business.
Right, and we helped our clients get over $65 billion in PPP loans, as well as turn them into grants with the forgiveness. And we're now on a mission to really help them with the employee retention tax credit, probably one of the best things for small and mid-sized businesses right now. Right through the end of the year, we've already processed over $3 billion worth of employee retention tax credits, which is cash in their pocket to help them out right now.
Can you tell people how to do that who may not even know it or not Paychex customers and don't understand? This sounds like a great opportunity for people.
Well, it is. And, Jim, you know, it's really we talk to the client. We take care of filing for this. Basically, they can keep the withholdings of some of the taxes that they're withholding from their employees and for themselves. They don't have to pay those taxes once they file for the employee retention tax credits. If they're keeping employees, retaining them in their business, this helps them offset wages, wage increases, as well as maybe some of the pay for new employees that they're bringing in. It's cash in their hand, which is very helpful to small and mid-sized businesses right now.
I'm writing this stuff down because one of our businesses is not covered by you. My others are, so I'm not concerned. All right, so this was the biggest raise I've ever seen you do. So you had a level of confidence because you're a very conservative man. Something is happening, Marty, that you were able to make that increase in forecast that made me feel almost roaring 20s like. Things can be that good?
Well, you know, Jim, we had a record-breaking fourth quarter. As you mentioned, you know, we had the best sales results in a fourth quarter we've ever had, best revenue recorded, and as well as operating income. And we're forecasting, as you said, to take our industry-leading operating margin from a little over 36% to 38% next year. I think there's just great demand for our HR support, our compliance help, our time and attendance, our payroll and retirement services. And we're able to hold our expenses down to produce great industry-leading margins.
All right, now maybe you can help us settle a debate here. The Wall Street Journal this weekend basically said that Americans are leaving unemployment rolls more quickly in states cutting off benefits. The New York Times, on the other hand, said where jobless benefits were cut, jobs are still hard to find. Now, these are diametrically opposed stories. Obviously, we are all, including the Fed chief, worried about whether if you cut those unemployment benefits, would people come back to work. Marty, you're probably the only person in the whole country that knows the answer. Can you settle that debate between these two papers and the rest of us in the country?
Well, Jim, what we're hearing from our clients is really it's a combination of many things that's making it tough to hire. It is the unemployment being higher than normal. That's definitely there in most areas. That's going to be that way through Labor Day. We're also hearing, though, very much that, you know, as you've said, there's stimulus money in people's bank accounts right now. And so there's stimulus money they didn't expect, and they're feeling a little bit more secure right now, at least through the summer. You're also seeing, of course, the market doing well for those in the market. You have COVID health concerns about people being resistant about coming back until more people are vaccinated. And then you have childcare, daycare, and schools that aren't back to normal. I think we kind of see this all coming together around the September timeframe. And I think that will really open up the market to allow people to be able to hire a little bit easier, would be our sense.
Well, shouldn't there be some concern among people who are jobless that they ought to lock in some great rate now versus when a lot of people come in October, where I think that we can actually drop how much we pay?
Well, I think that's a great question. I do think, Jim, that's true. I think you're seeing elevated minimum starting rates. Even the frontline service positions up 17, 18, sometimes $20 an hour, where they were less than 15. But I think people are saying right now there's all those concerns I mentioned. And when you balance it out, I think they're waiting. They're going to kind of do a little bit wait and see. And then I think it'll start to pick up again in September. However, I will tell you that our clients hired over 300,000 new employees last month and 3 million in the last 12 months. So there's hiring going on.
I was amazed at the hiring in leisure and hospitality. Just, to me, that's a boom, Marty.
Yeah, it really is. And it's great for those folks. And the supply is there, as you know, a lot of pent-up demand, as you know, for restaurants and a lot of service positions. I think, the tough part is that a lot of it's part-time right now, and the employers are being a little bit careful that if they have to pay higher wages, do they bring as many back? But right now, it's all about finding the people and hiring them. And I think they'll be able to find them, and we're out there to try to support them with our HR support as well to doing just that.
Well, I know, again, I always disclose I'm a client, and you do a great job. This is your time, Marty. It really is. And I'm glad that all the analysts, well, there's still one who doesn't understand it. All the analysts recognize it's not about the float. It's about all the products that you now offer that companies need. Thank you to Marty Mucci, President and CEO of Paychex. Happy 50th birthday.
Thanks, Jim.
Mad Money's back after the break.